Joining us today is OSU Extension Livestock Marketing Specialist Derrell Peel. Derrell, it's certainly starting to get warmer today, and in the next few weeks it's supposed to get even hotter. So what can you tell us about the feeder cattle markets as we get into summer?
Right now feeder cattle prices, it depends on the weight, of course. The lightweight feeder cattle, the calves and stockers, are about 15% higher than they were this time last year. So from that standpoint, prices are better. Seasonally, prices for calves tend to fall this time of the year, and they have been generally, although with the rains we've gotten recently and the improvement in pasture conditions, they've actually kind of steadied out a little bit, but they'll probably continue to be under some pressure here seasonally. The big feeder cattle tend to go up this time of the year, and they have been, and so they're more or less following seasonal patterns. Now, of course, all these feeder cattle markets are being impacted by high feed prices and high production costs in general, but that's pretty well priced into the market at this point. So unless those things change dramatically, the market already reflects those conditions.
What about feed cattle markets?
The fed cattle markets are a little bit stronger right now. They generally fall through the summer to a late summer low. But they've actually picked back up a little bit, and part of that may be the fact that we're going to pick up an underlying trend here as we go through the year. We might see these prices hold a little bit steadier this summer, and then pick up again this fall. So right now we're kind of moving counter-seasonally on the fed cattle prices.
What about cull cow markets? How are they doing?
The cull cow market has been remarkable this year. We've had very, very strong prices for the most part, with a little volatility, and that's despite the fact that we've continued to see cow slaughter well above a year ago levels. We're running, in fact, in the last 2 or 3 weeks of data, beef cow slaughter has picked back up a little bit. So we're running 15% above a year ago, and yet these prices are holding very, very well and have actually picked up a little bit in the last couple of weeks.
So how is beef demand holding up with all this?
Well, beef demand, compared to a year ago, we saw very strong beef demand in 2021. Right about now, prices advanced sharply. So today, box beef prices, for example, are a little bit lower than they were this time last year. Now, the latest retail prices we have from May are actually well above a year ago, but they're going to be coming into those higher prices we saw in the second half of last year. I think box beef demand, or beef demand in general, has probably moderated a little bit. With the inflationary environment we're in, the concerns we have, it's probably moderated a little bit, but it's still actually holding fairly strong, and with the pork and poultry prices actually a little bit higher right now compared to a few months ago relative to beef and pork, it's holding up pretty well.
So with all that said, what does that look like for the second half of the year?
The next 6 months, we've got an awful lot of things up in the air. Obviously, the U.S. economy is weakening, the global economy is weakening, so we're not quite sure what all that's going to mean for markets as we go forward. We've got higher production costs. We don't know what feed grain markets are going to look like in terms of this year's harvest and so on. And then we've got drought issues still, and so there's a lot of uncertainty for the next 6 months. Frankly, it might be easier to talk about 18 months from now than it is 6 months from now. But I think, with all of those factors in play, at some point in time, we're going to see some uptrend in these markets because numbers are going to get tighter, but that may not happen that much over the next 6 months.
Well, Derrell, we appreciate your insight, and we'll keep an eye on the markets.